One of the questions that I'm asked most often is, how do you know whether a market is worth buying or selling? The good news is that you don't need dozens of indicators. In fact, I'm going to show you a very simple approach just using two moving averages. On this chart, I've added the 55-day moving average, this line in blue, and the 200-day moving average, this line in green. The first thing that immediately stands out is that price is trading below both of them. And why does this matter? Well, the 200-day moving average is the one most actively watched measures of the long-term trend. It effectively supported the market throughout the rally from 2023, but now it's above the current price, telling us that the long-term trend has turned lower. The 55-day moving average gives us a good picture of the medium-term trend. Over recent months, every rally back towards this moving average has been rejected. Buyers have repeatedly failed to regain control and the market has continued to move lower. So from a trend perspective, both moving averages are telling the same story. There's another piece of evidence as well. If we draw a trend line from the March high, we can see that the market remains in a clear downtrend, and that trend line provides another layer of resistance above current prices. When you have the moving averages pointing lower and a descending trend line overhead, the weight of evidence does favour the bears. So what does this mean for your trading strategy? Rather than trying to catch a falling market, I'd be looking probably to sell rallies to resistance, particularly towards the 55-day moving average or the downtrend line while those levels continue to hold. Looking ahead, I believe that the market can establish itself below the 4,000 level and maintain a close below it. Then that should open the door to further weakness. So the first downside objective would be the 78.6% retracement of the rally from the August low, which comes in at 3,796. The key takeaway is this: you don't need a complicated chart full of indicators. Sometimes just two moving averages and a trend line and a few key price levels are all you need to identify the dominant trend and actually build a sensible trading plan. If you found this useful, follow for more practical analysis and market insights. Thank you.